Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So we had a huge move over the last 11 days, and what it amounts to is a price thrust. And I went back and looked at prior price thrusts, and we've got 4 of them in the last 4 years, and we've got one of them in 2011 that I want to look at to see what we might expect going forward. Then I'm going to turn to SPY, and I'm going to break down the Trend Composite because it has been negative, but it is on the verge of triggering a bullish trend signal. And then we're going to look at the wild ride in Palladium. So I want to look at the recent price thrust and go back and find some prior instances. Now, to be perfectly honest, there are not enough instances to make this a proper study. You know, in order to have a proper study or to derive some edge, you need to have, well, at a minimum 20, I would think, for a single signal on one chart, and preferably, you know, the more the better. But we do have a few instances when there was a price thrust over a 10 to 11 day period. And by a price thrust, I mean, if you look at the last 11 days, the rate of change indicator at the bottom shows a 10.7% gain. That is a huge gain in 11 days. And you can see we broke out of this wedge and we're back above the 200-day for SPY here. And if you go back, you can see in November 2020, the middle of November, we had a similar price thrust. We had and I'll scroll over, an 11% advance in 11 days. And I need to move that arrow over just a little bit. Sometimes the arrows get shifted a little bit. But there's a price thrust and there's a triangle breakout. And we just continued higher basically after that big breakout and price thrust. So here we've got a thrust and a wedge breakout. If we go back to April 2020, we can see we had in early April a price thrust on the 6th, up over 10% in 11 days, and we continued higher and didn't get much of a pullback consolidation until June there. So the last two clearly were bullish. One triggered a breakout and one marked kind of a V bottom. Now I'm going to go back a little bit here. If you look, next one we get is in January 2019. So here we had just a gut-wrenching decline into the end of 2018, and we were down over 10% in 11 days, the red bars there on the rate of change indicator. And then suddenly we get a 10+% advance in 11 days, a V bottom. And we just continued higher for several months, a few months, and then had a couple of correction pullbacks along the way. So far, the previous 3 have led to extended gains. Now, we have to go all the way back to 2011 to find the next 11-day price thrust. So here we are in 2011, and you can see we had this breakdown here in July, and then look at this volatility. And what caused this volatility? Does anybody remember? Well, it had something to do with Europe at the time. It was the European sovereign debt crisis. And this is where it kicked the can down the road became the saying, basically. Just kick the can down the road as far as those debt repayments are concerned. But we had huge volatility. You know, we had these 7 and 8% swings on a regular basis. And then finally we got this huge swing, and we got a plus 10% advance in 11 days, and we broke out. We broke above the highs here. We got above broken support. We exceeded the 67% retracement for a day or two, and boom, then we fell back. And this is the one that kind of caught my eye because we've got another crisis, and it is in Europe. Now, history does not always repeat itself, but it does rhyme. But we're currently up very sharply, and we've exceeded the retracement marks, and we've exceeded broken support, as I'll show you. And that leads me to believe I'm more inclined to wait for a pullback or a bullish continuation pattern. And so here in 2011, we did get a sharp pullback, and then we bounced, and we kind of ended up consolidating with a triangle and then got the triangle breakout. And that's more my kind of signal personally. I'm looking for the second move, if you will. This is the first move for the early birds, and I'm looking for the continuation move, like a bullish continuation pattern forming and a breakout. And then you can see here we had a little wedge there a couple months later and another wedge a couple months later. So there were other opportunities to play the trend even after that initial surge. We don't have to follow or chase the market on the initial surge. We can wait for the pattern that we like to come to us. So if we look at SPY currently, it's not a leader. The leading ETFs are the ones that hit new highs in March. SPY just got above its February highs. So, if you're looking to go long the market, you wouldn't be looking at SPY, you would be looking at other areas of the market that are stronger. But if we look at SPY just as a benchmark for the broader market, you can see and keep 2011 in mind. But we have this, support zone and it's broken. And then we come back to it and we hit resistance just above. And so we've got a resistance zone and we've got prior support that's broken, turning into resistance. And you can see we retrace 2/3 basically, and then we get this big gap up. And so this kind of makes me a bit nervous because you've had this huge 4-day surge, you stalled for 3 days, and you had another 4-day surge. And if you look back over here, we have a candlestick that kind of is similar to what we see there in the star position. Now, we haven't got a reversal yet, but when I talk about letting the market come to you, I'm looking for a tradable bullish setup. I'm looking for bullish continuation patterns. I don't want to force a shot. There is no shot clock in the market, so we don't have to shoot within a certain time. We don't have to take a trade within a certain amount of days. We can wait, and we don't have to take a trade if we don't want to. But I'm more inclined to wait for a pullback, maybe to 440, maybe we get a flag or a wedge, and then play that subsequent breakout here. Because with SPY up 10.7%, it's at very least short-term overbought and ripe for some volatility or a pullback. Now I want to shift gears a little bit and look at the trend signals because the trend composite is on the verge of turning positive after being negative there. You can see since January 24th, the trend composite is the bottom indicator. So I thought I would show you the method behind the madness of the trend composite. So it's basically the aggregate of 5 indicator signals. So we got 3 indicators in the windows there for the indicators. And then we have on the price chart, Keltner channels and Bollinger Bands. And if you want to plot the trend composite, you need the Trend Investor Pro Indicator Edge plugin. So you go down to the bottom right, you click plugins, and there you can see the Trend Investor Pro Indicator Edge plugin. And then over on the far left, you can open up the chart settings and you can see at the bottom all the indicators that are available and then the individual settings for each indicator. And you can read more about that by going to the plugin page and seeing the details there. But basically, I've got all my indicators set at 125 days, which is 6 months, because I'm looking to capture this 4 to 6 month price change or price trend reversal, if you will. So when we get above the red line, that's a break above the upper Keltner channel. If we get above the blue line, that's a break above the upper Bollinger Band. But right now, we are above the upper Keltner channel, so that indicator is bullish. And it's an in-state signal, so it stays bullish until we go below the lower Keltner channel. So even if we fall back after this break above the upper line of the channel, it's not going to turn bearish. It's just going to say stay bullish until we go bearish, actually. So Bollinger Band, still some work to do. We can see Stoke close is moving above 60 today, and it depends on where we close, but that would be bullish. We can see CCI, based on closing prices, is not bullish. It needs to get above 100. We can see the 5-day rate of change of the 125-day moving average is positive, which means that 125-day moving average has turned up and is rising. So we have 1, 2, and 3 with the Keltner channels. 3 indicators pointing up and 2 down. So that's a net of +1. In the bottom window, you see the trend composite is +1. Now, keep in mind, this chart does not have a closing price. It depends on where we close as whether or not we will get a trend composite signal or not. But that is how it works. And also make sure you put an underscore before your symbol, because I have all my signals and back tests and everything set up for unadjusted data. Do not adjust for dividends. And to do that here at StockCharts, you have to put an underscore before the symbol. So note that subscribers get access to the Trend Composite signal table for 276 ETFs. And this is for subscribers at trendinvestorpro.com. And here is the ranking table. Actually, it's trend signals. There are the trend signals. These are all in uptrends. And then I rank by the Stoke close indicator. And I have a 7-part series on using the Trend Composite as part of an ETF strategy and using Stoke close for ranking. So any subscriber to trendinvestorpro.com can get access to that 7-part series. And on Thursday, I will have part 8, which will look at profit targets. But if we just look here, we can see the leaders are commodity related, which includes agriculture. You know, we got copper miners, Mexico, Peru, agribusiness, steel, materials, natural gas. Insurance is sneaking in there. It's the strongest part of the finance sector, and then more energy and corn. So it's clearly the leaders are in the commodities, not in the technology group. Now, I also put out a video on Wednesdays, a very comprehensive video. And this past Wednesday, I covered Palladium because it's had a wild ride. You know, it went from, well, it's basically up 108% here from the December low to the early March high. And then it went from 300 to 200, down $100 and 33%. But if you look at the overall structure of the chart, Trend Composite is still bullish, so we're still in an uptrend. You have a big advance. It's a gut-wrenching decline, but it came back to this potential reversal zone. So you have broken resistance and then support, and then you have broken resistance and support in this blue zone, and you have a 2/3 retracement. So we're at a potential reversal zone for Palladium. And I also noted that gold and silver were in potential reversal zones based on their pullbacks. But this is one to keep your eye on in the coming days and weeks, and it fits with the commodity theme. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.